start with today's lesson. So basically, today's lesson is about how you can use technical analysis with systems together to perfect your trading in a way because they both go hand in hand. You can't just use a system on its own. Yes, you could use technical analysis on its own if you good at it, but as a beginner, like let's say you just started trading, sometimes it's hard for beginners to determine where they're actually going in the market. So now that's where I decided to add a whole system that can make it easy for you to understand where you actually need to be going in the market and where you should be taking your entries and all of that. But now let me just quickly explain that. Obviously, the first thing you learn about the market is that there is something called a bullish trend. This is when the market is moving upwards, and then we have a bearish trend, which is where the market is moving downwards, and then we have a sideways trend, which is when the market is just moving obviously to sideways, just moving up down up down up down up down, just like that. So now when it comes to understanding where you're going in the market, it's always best to start on bigger time frames. I usually start on the daily time frame. Sometimes I do go to the weekly time frame to see where I need to go in the market, but sometimes it's just easy to just start on the daily time frame. So now looking at this pair, which is GBP USD, it's clear to see the trend that we're in now is a buy trend. It's very clear to see that this is a buy trend because it's just moving upwards. You see creating higher highs, lower lows, higher highs, lower lows, higher highs, lower lows, and all of that. So now let's go to drawing in the trend. Obviously the trend started here. We're looking for a trend that accommodates the movement that we have now, basically. So that means when I say this, I'm saying a trend, like let's say like this, it has touch 1, touch 2, touch 3, touch 4, touch 5, touch 6, touch 7. So this trend has been a very strong trend since, we could say, let's say the 18th of May. This has been a strong trend to determine our reversal. So meaning if we pushed up and reversed and to retest the trend again, it was easy to just take a buy here, 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 and take a buy here. You understand? Now people will say, okay, but then Tinash, what if this thing actually broke the trend and I took a buy here? Now this is where we come to the system part. You understand? Let's go to the system. When we look at the system, I have something in place here which is called the Ichimoku cloud. And the Ichimoku cloud is based on the theory that when the candlesticks are above the cloud, we're only looking for buying options. When the candlesticks are below the cloud, as you can see here, we're only looking for selling options. So now, when you look at it in that sense, it's clear to see that, okay, we've been above this cloud since as well, the 18th of May. Can you see how that's exactly the same as the trend line? But now you ask me, okay, but what if it broke the Ichimoku cloud? That's when I start coming to the bigger time frame, such as the weekly. As you can see on the weekly, when we broke above this cloud on the weekly time frame, can you see the distance between the cloud and the candlesticks? The bigger the distance is between the cloud and the candlesticks, that means the stronger the trend is. So that means even if it just slipped below your trend line or just slipped below the Ichimoku cloud in the daily time frame, you still knew you were supposed to be in a buying trend, because as you can see here, we way above this Ichimoku cloud. We way above, meaning the trend is very strong. Before it can break this cloud, it will need to consolidate, 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 then impulse, 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 consolidate, impulse before it breaks, and then we'll start looking for long-term selling options. But for now, for as long as we are above this cloud here on the weekly and on the daily, we're mostly looking for buying options. Yes, and we're mostly looking for buying options. So meaning every selling trade that you take is just scalping it. You're holding it for a short term, and then all the buying trades that you take, you're holding it long term. So basically swinging the buying trades, and then for the selling trades, maybe sometimes it can sell for 2 days, 3 days. But majority of the time, when it comes to the buying trades, as you can see, you could have been holding this buy since the 18th of May, until today, because it's still buying, as you can see. So now let's go back to the daily time frame. Like I said, as you can see, it's been above the Ichimoku cloud So majority of the time, we're only looking for buying options. As much as we had times to sub, those are the retracements. Obviously, it can't just buy and buy and buy. It needs to retrace, come and test the Ichimoku again, bounce off, carry on, retrace, test the Ichimoku again, bounce off. You see, same thing. Making higher highs, lower lows. As you can see, it just goes up, comes down, goes up, comes down, comes back and tests the Ichimoku. That's exactly the same as the trend line. As you can see, it goes away from the trend line, comes back, tests it again, goes away, comes back and tests it again. So basically what you do is, once we've bounced off the trend line, you're looking for the newest high. So once it creates a new high, it'll definitely come back down, test that position again on the trend line, and then go and create another high, come back down, test that position, and then go and create another high, probably come back and test that position again. Do you understand? So now that's how you're going to look at it in terms of trend lines. And if you want to draw the top side just to see how the market is bound, where is it bouncing off on the top, you can easily have these two touches here. As you can see, these are your two touches, touch one, touch two. There's a possibility that it could come and touch the top of this side, but we don't obviously control the market. We just follow the market. We don't control the market. We go where it's going, and that's the easy way about it. And then let's go down into a smaller time frame so you can understand all the things that are currently on my chart. As we go to the 4-hour time frame, as you can see on the 4-hour time frame, I have these lines. These lines is what we call either the quarter point theory, psychological levels, or some people actually call it cheat codes. But yeah, it has different names, but it's based on how the markets move price to whole numbers. As you can see, you can't see it clearly now, but if I quickly add the arrow indicators, let's go to arrow indicators, arrow signals. Obviously, the more you grow in Forex, you stop using a lot of indicators. At like the beginning, sometimes you do need to use it. I understand, because I also started with technical analysis. I didn't understand it fully. And then I started growing into it, and I started removing indicator after indicator after indicator, because I started understanding how the market actually moves. But for a person who's just beginning, it seems much harder. But let's just quickly put in this arrow indicators. Look at how, when you look at these arrow indicators, look at how most of, let's just say 70% of the rejections or reversals appear on whole numbers. So with GBP USD, I price it up in a way of, let's say, from 37,000, I'll go to 37,500, then 38,000, 38,500, 39,000, 39,500. As you can see, 40,000. Now look at how most of the rejections appear on whole numbers. Those 500s that I'm talking about, look at that. Look at how good these rejections are. Look at how it rejected perfectly on the 40,000 line. Look at that. 6 rejections straight. 1, 2, 3, 4, 5, 6. Exactly on the same price level. Exactly on the same price level. As you can see, I'm always looking to enter at a certain price. I don't just enter my entries anyway. And now when people look at my results, they'll say, yo, your entries are so good, so perfect. It's just because I only enter at specific price levels. If I see getting to 38,000, which is here, and it says buy, or I see reversal happening at that specific section, I'll take my buy, and then I'll put my stop loss just below. So meaning if I entered at 38,000, I'll put my stop loss at 37,500. You understand? So meaning I'm only losing $5, or I could just put it in between right here at 37,750 and only lose $2.50. But to gain almost, let's see, this would be, okay, from here would be 5, 10, 15, 20, 25, 30, $35. So with 0.01, of course, we're using 0.01. From this zone here, I'm aiming to gain at least $20 or $15, but willing to risk $2.50 or $5. So now, as you can see, price always reverses at these whole numbers, as you can see, at these whole numbers. But you need to understand what trend you're in as well. As you can see, I had my trend drawn in already. It's because I didn't want to take so long with the video, so some things I just left them there. So let me just quickly remove these arrow signals. Delete. As you can see, my trend was already drawn in. This was for the past 2 weeks. 2 weeks it's been moving in this trend. As you can see, it started here, hit the low, made a high, made a low, made a high, but it hasn't actually come back to make a low. But that's because the market could start a new trend inside a trend. So basically, as you can see, if I draw in my trend, can you see that? If I quickly draw in another trend line, here's two touches here. So meaning we're in a buy trend, inside a buy trend, inside another buy trend. So definitely if this one breaks, it'll probably come and touch here. If this one breaks, it'll come and touch the overall buy trend. You understand? Then maybe just bounce off and continue going to the upside. So now what I was trying to explain about these cheat codes is that this helps you determine what you're in as well too. As you can see, we've with the current week that we just paused right now, on the what's this? Let's just say the 18th, and the 18th, yeah, of May. As you can see, we're stuck in a consolidation between 42,000 and 41,000. So this was a clear indication that we're in a consolidation for the whole week. We couldn't break those two price levels right here. So now what I understand about the quarter point theory, or how it helped me understand, when we have strong fundamentals, pairs can move at least, let's just say, a good 4 to 5 price levels, meaning 1, 2, 3, 4, 5, and then it's done. That's done. It's gonna start consolidating and then continue to the next day. On a normal day, we only move through 3. So let's just say 1, 2, 3. Sometimes you could get to 4, but most of the time, majority of the time, it's always 3 price levels, or just, yeah, it'll be 3 price levels. Now, on a very slow day, we could probably just move between 1. So it's helped me understand how far a pair can move in a specific day. It's helped me understand that how far can a pair move in a specific day? How many price levels can it go through before it starts consolidating and preparing for the next day? And this is just to help people who are just learning how to scalp trading. We'll get to a lesson where I teach about how to hold swing trades, but this is just for scalp trading basically today. So as you can see, easily scalping. If you ended a buy here at 40,000 and you put your stop loss here at 39,500, or let's say 39,750, losing $2.50 or losing $5, you could have easily taken this trade buy, because overall buy trend, and pushed to that side. Now someone will ask me, but then how did you know that it'll buy from there? How do you know that it's going to do that? I have another thing on the system that helps people understand how to do scalp trading basically. So let's go to the 1 hour time frame of the system. As you can see on the 1 hour time frame of the system, we still have the supply and demand system, and now we have the stop hunt boxes. This is from the system called Beat the Market Maker, which is called, so this is what we call stop hunt boxes. This is basically, how do I explain this? In terms of the market maker theory, is based on how they believe the market shouldn't cross these boxes. You understand? And it's true. Most of the time, it doesn't cross. Like, it really doesn't. Let's say 4 out of 5 times in a week, it won't cross. But there's always that one stop and box that will definitely cross and just move on to the next day. But 4 out of 5 times, it hits the stop and box and reverses directions. Hits the stop and box and goes in the opposite direction. As you can see, even now, when you look at it, sometimes, okay, it doesn't have to be inside of the stop and box, but just beside it or inside, either inside or beside it. As you can see, when it gets close in it or beside it, it can reverse to the opposite direction, as you can see here as well. When we're given a sell, it hits. It gave us a sell same at the stop and box, so you could have easily sold. It gave you a buy here, you could have easily bought. So now, how to use this thing efficiently? Systems work, yeah, but then you need to understand how the market works in terms of also price action and your overall trend. So what people don't understand about this whole supply and demand system is that people will get confused and say, no, I was told that when it's in the red zone, we sell. When I'm in the green zone, we buy. No, but if you always did that, that means the market will always move in a consolidation. The market would never make new highs or never make new lows. Do you understand? So now people say, no, this indicator repaints or whatever the case is. The indicator doesn't really repaint. People just don't understand how to use the indicator. People are using the indicator the wrong way. You don't just sell because it's on the red side. You don't just buy because it's on the green side. No. So what you do first is when you come back, you start by your price action. You determine where the market is going. So like I said, on the daily time frame, here clearly we've been in an overall buying trend. Clearly an overall buying trend. Now when you go back to the Ichimoku that I showed you on the daily time frame of the system, clearly we're also in a buying trend, which means what? This means that every time you got into the green zone, you had a higher chance of winning because this demand zone is where you choose your buys. This is where you choose your buys. So meaning you had a higher chance of winning if since May of 2020 on the 18th, if you took buys every time it got down into this green zone, you would have definitely made profit over time. You'd have definitely made profit over time. You understand that? So how do I explain this? From the green zone, it'll buy, right? Then it'll push out, push out, push into a red zone. And then most people will try to sell here, but that's not the case. It'll shift this red zone upwards, meaning repaint. It'll repaint it, pushing it upwards, creating new highs. Because at the end of the day, it's in a buy trend and it needs to create new highs before it can retrace back and all those things. So now people don't understand that, okay, with this whole system, all you do is if you end up buying trend, right, long term buying trend, we always looking to buy from the green zone. And then all your selling options at the top are just scalping options. These buying options, since we're in a long term buy trend, these are your swing trades. So if you bought from here, you'd easily hold this trade for a good 3 days and profit. But if you decide to take a sell, you should know, okay, after a day or after a few hours, just close the trade because at the end of the day, the overall trend is a buy trend. So we only looking to buy from the green zone. We only looking to buy from the green zone. So this would help in terms of swinging your trades and adding new entries on top of entries. So basically scaling in on all those stuff. This would help you with that. So meaning ever since it started, it kept on. This was obviously the green zone before. When we shift back, this was obviously the green zone before. So as you can see, you'd have bought here under demand zone. This green zone is the demand. The top side is the supply zone. You'd have easily bought this side because long term we're in a buy trend. So figure out what's your structure first before you start attending to systems. You don't just attend systems. You need to figure out what is the structure first before you attend to your system. So looking at it, if we're in an overall buy trend, we always looking to buy here in this zone and hold 3 days, 4 days, because it'll keep shifting and it'll make this indicator repaint on the red side. Meaning, if we're in this buying trend, it's going to shift it upwards. It's going to keep shifting it upwards, and then at some point, it'll start come back down to this green zone and then buy again and then shift it upwards again. Do you understand? That's how it works. This is how this whole indicator works. And as you can see, it's a mixture of the Fibonacci retracement. I mean, not retracement, just Fibonacci and supply and demand. Demand here, supply this side, Fibonacci levels, as you can see. So now looking at the part of scalping, how to scalp small entries. Now, as you can see, I have the stop hunt boxes here from the Beat the Market Maker. As I said, 4 out of the 5 trades that you can take in a week, 4 will definitely work at the stop hunt boxes, right? So meaning you would have to lose one. Sometimes it could only be 3, and then you'd have to lose 2, but you still want 3 at the end of the day. You still want 3. But if you're following the overall trend, you'll definitely be safe majority of the time. So me saying this, I would say, if we end up buying trend, right, you only looking to enter the bottom stop hunt boxes, the bottom, because they definitely always work. Like even if I shift backwards, as you can see, every time it got close to the bottom one, it always redirected and went the other way. As you can see, as we shift back, every time it touched the bottom stop hunt box, it redirected itself. And these stop hunt boxes don't repaint. Once the price has passed the stop and box. It's passed. Just like this. Look at it. When it bought and it went through the stop and box, you see, it went through. It never repainted. It didn't shift with it. No, it stayed there. It stayed where it belongs. It doesn't repaint. It doesn't move. It doesn't do anything. It remains at that position. It never repaints. The stop and boxes don't repaint. So other indicators repaint, like maybe the arrow signals, the brilliant reverses, they do repaint. Those things do repaint. But then that's why we create multi confirmations before we enter a trade. We don't just enter a trade wherever we feel like entering a trade. We create multi confirmations for trades. So as you can see, every time it touched the bottom stop and box, it did reverse and carry on, because why? We in a buy trend. So all your scalping trades would have won. So now with this, how would your trade profit work? With the take profit, obviously, if it's at a certain price, when we come back to the side, right? When we come back to the side, we would say, okay, let's go to the 1 hour time frame. Let's say I took a buy exactly at 41,000, right? My stop loss would be 41,500, meaning I'll be losing $5, or 41,750, meaning I'll be losing $2.50. So let's say you took your entries right there. You take profit after most of these levels will appear where the stop hand box also appears. Basically, if I added the stop hand box here, you would have seen this was easily also a stop hand box entry. It would have been an easy stop and box entry. So 41,000 you entered there. Your take profit would have been, okay, take profit one, $5, your first $5. Take profit two, your second $5, meaning $10. Then you could have added take profit three at 42,500, meaning your, what's this? Your third $5, meaning you'd have made an overall of $15, but you'd have lost either $2.50. You'd have lost $2.50 to easily make $15. But then whenever you enter your entry, as it's pushing, always move your stop loss with it. Always move your stop loss with it, so you can keep all your gains, especially as a beginner. That's one thing that you need to do. Always keep your gains. Don't be pressured to not take $2 profits, $1 profits. When I started with $5, and I'll take 50 cents, 20 cents dollars profit, 30 cents dollars profit, and it grew my accounts. And people would laugh and say, "You're not making money, you're making 30 cents." But if you look at where I am now, you wouldn't complain. Like no one would complain and judge me, because at the end of the day, like most of the people or traders people look up to, they see them making 10,000, 5,000, 15,000, and then they say, "Ah, but I need to make this also the same, because they also making this in one day." But you're forgetting, when they started, they initially started taking $2 profit, $3 profit, $1 profit. When they started, they didn't just jump to making 15, 10, 20K at once. They started with small amounts, first building their accounts, and then as they skill grew, their accounts grew, meaning they could take bigger trades to make bigger profits. So now let's go back to, oh sorry, let's go back to the system. As you can see, like I said, if you're looking to buy, swing, or let's say scalp, actually, if you're looking to scalp trade, find out what your overall trend is. If your overall trend is a buying trend, then you're looking to buy the bottom stop on boxes. If your overall trend is a selling trend, you're looking to always sell at the top stop on boxes. Do you understand? But now here, let's say when we're in the red zone, right? We're in this red zone. Let's say it keeps shifting and shifting and shifting. At some point, it's gonna hit a top stop and box and sell. So the only time I take top stop and box trades is when I'm actually in the red zone, meaning I'm preparing for a retracement of my buying trend. So basically, this is to just help you catch the retracement, but not for you to hold long term, because what the long term trend is a buying trend. So we're still always looking to buy here until we can break either our trend line or break the Ichimoku cloud, as you see, or break the Ichimoku cloud. So now let's go back to the whole technical analysis side. So now people who've been trading for a while, you would know how to draw your demand and supply zone. I usually draw my zones close to the most recent price, like the most recent drops or the most recent um, increase, basically. So like this, as you can see, it was already drawn in. This high was already created. Like, nah, I don't go all the way back. I don't go 3 years back, 4 years back, 6 years back. No, I use the most recent price. The most recent price. I know going back and looking at the old information assists. Yes, it does assist, but the market usually reacts to zones that are more current. As you can see here, this zone was the most current zone that we had, which was on the around about between the 15th of February and the 25th of February. We had this zone created here. I can't really see the day properly, but we had this zone created here. So I drew in my supply zone. This was my supply zone right here. After it made this low here and it pushed away, this would have been my demand zone, my recent demand zone. So meaning if it ever came back, I'm looking to probably buy in this zone here. If it ever came back down, I'm looking to buy this zone. But the possibilities are kind of slim, but we would have to see. Like I say, we don't control the market. We wait to see what it does first and we just follow. So now, since then, as you can see, this was my demand zone. So there are other support zones within the structure. As you can see, I use this as my recent low. So meaning if I broke this, I know it will probably come in reverse at the zone right here. Then this zone was also created because when it came and broke and made this low right here, I drew in this zone because I knew there's a possibility that it could come and react at this zone. But then it did come and react, creating it into a consolidation. And you can see it was retesting, it was testing the previous supply that was there that I drew in, which I said was between the 15th of February and the 25th of February. As you can see, it's currently testing it. So now there's a possibility that it might break through, break and just push, because usually when it breaks through zones like this, it's just gonna push strong, push very strong, create maybe like 3 4 big kind of pew 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 gun, and then it'll come in reverse, test the zone again, and then maybe continue to the upside. Or there's a possibility that it might just come down, break here, and then break the zone, and then we'll be aiming to look for buys maybe at the 40,000. Again, that's a big possibility. If not the 40,000, then definitely 39,500 will definitely be coming to look for buying entries again. So basically between the 40,000 and the 39,000 mark area would definitely be a zone for why we would look for buying entries. Why I say this, because as you can see, the zone between the 40,000 and the 39,000 is a very strong area. Very strong area. As you can see, most of the reversals occurred in this specific zone here. It occurred in this specific zone. So I'll definitely be looking to buy it. And as you look at the Fibonacci retracement, this is the 50% line. So most of the time when I look at this system, it comes in reverses at the 50% line. If we go back to the system itself, you can see it's either to the 8,2, but most of the time it does also reverse at the 50% line. But then I hope people understand how this is actually going. If you still don't understand, you just contact me and we'll speak about like how to understand your entries. For now, this was basically a lesson on how to scalp, you know, instead of swinging. These are just scalp entries while you're growing your small accounts and all those things. These are just scalp entries and helping you understand how does the system actually work with technical analysis. Because technical analysis is the most important thing you'll ever have to learn, no matter what. Technical analysis is the most important thing. Like, it definitely tells you everything about the market. I just use maybe systems sometimes to, like, let's say if I'm confused, something's confusing me, I'll come and check here and see, okay, where am I on my system, right? Am I in my demand zone or am I in my supply zone? And then my overall trend, what trend am I in? Am I in a buying trend or selling trend? Which side is it better to attend to? Because at the end of the day, someone who, let's say, who entered a buy here, right? Let's say the zone, right? Someone who entered a buy here, but was following the overall trend. Yes, he would have went into losses, but at some point his profits would have been higher than the loss he went into, because why? He followed the overall trend of the market. He followed the overall trend. He just had an early entry. But things like that get fixed over time. That's why, like, as a beginner, start by building your account first, so that at some point you can easily hold your trades. If you know you're following the overall trend, you could have easily entered here. It didn't matter even if it pushed down more, because you knew the overall trend is a buying trend. It still might continue to go to the upside. Do you understand? But then that's why you need to learn how to do proper risk management and understand where you go in the market, because obviously you can't say that you would enter, let's say, a buy right here. You enter a buy, then it goes down first, but you did it with one lot size. Obviously, if you're gonna do it with one lot size of 0.50, it's going to damage your account. But if you easily entered, let's say, 0.01 here and then another 0.01 here, and you still continue to push down, because you're following the overall trend, and at some point you have went back into profits because you're following the overall trend of the market. And that's how it actually works. Like, if you just follow the market that way, you definitely make a lot of profits. But now, how to understand, like, my understanding of, let's just say, demand and supply zones, and then support and resistance. Obviously, you, like, they tell you, okay, if your demand zone has more than two touches, it's definitely a strong zone, so you draw it in. If your supply has more than two touches, then it's definitely going to be a strong resistance, so you can put it in. That applies. That actually definitely applies. Like, I won't lie, that does apply. But sometimes I also look at, okay, let's say I see a specific zone such as this one. As you can see, I drew it in, even though there wasn't more than one touch. I drew it in knowing that it was going to be a strong zone, because at this point this was a new high that was created, and then a sudden reversal just happened. A very strong, as you can see, this is a very strong reversal. That means somewhere in the past, without even having to look into the past, somewhere in the past there was a zone holding it. There was a zone definitely holding, which is why it created such an impulsive movement to the downside. So I would draw it in and know that, okay, next time when it comes here, it's not just gonna cross through. It's probably gonna play around just like this. As you can see, definitely gonna just come and play around before it actually crosses over. So that's how I also choose my supply and demand zone, or resistance and support. Basically, I look for either the two touch theory, or I look for zones where the market just moved away from it impulsively. If it moved away from that zone impulsively, that means definitely previously there was something going on at that price that made it move away from that zone impulsively. You don't need to look all the way back, like back at 2013, 2012, to see that. It kind of makes sense if it did reverse like that. It definitely means that that's the case. Obviously, when this was not there, I would have looked, like, just, let's say, let me go to the daily. Before this was created, you'd say, okay, but then how did you know it was gonna reverse? How would you know that it's not gonna reverse here? I would have obviously looked, go into my daily, because as you can see in this section here, there's basically nothing. So the nearest thing to look at was only this section here, and that's how I look at it. This was my closest section to look at. If there was something playing around here, I would probably looked at a zone that was created here. But as you can see in this gap here, there's nothing. So the closest thing to look at for reversals or movements is this next block right here. As you can see, it's just this the closest thing to look at. If this wasn't here as well, the closest thing to look at was something right here. As you can see, there is something right here. So that's how I determine my support and resistance, or demand and supply zones. But at the end, always just follow the overall trend. The best thing to do for yourself when you're trading Forex, follow the trend. Follow, don't try and control the trend, don't try and create your own assumptions, just follow the trend. As it's going, follow. If it creates a new high, start looking for selling options. When it goes to a low of a buying trend, start looking for buying options. When it creates a new high again, start looking for selling options. As easy as that. And you'd easily determine that by drawing in your price action, your technical analysis, your top trend, your lower trend, and it's as simple as that. And now the system side. System. Just understand, systems are free, guys. Systems are on Google. I can get you any system you want on Google. They're all there. It's just how you understand it becomes a problem. How you actually use it becomes a problem. A lot of people use the system wrong. They use it totally wrong. Whereas It's very simple. It's used to follow the overall trend. If the trend is a buying trend, you're looking to only buy in the green zone. If the trend is a selling trend, you're always looking to sell at the red zone, which is your supply zone, green side your demand zone. As simple as that. As simple as that. It's not just going to be buy, sell, buy, sell, buy, sell. It'll repeat, it'll push this thing backwards or push this thing downwards. Because why? It needs to create new highs or create new lows. If it just went up, down between this zone only, that would definitely mean that the market is just a consolidation forever and ever and ever and ever and ever. And that's not the case. And that's really not the case. But yeah, um, for my students, obviously, I'm going to send the analysis for what's going to happen in the market later on today. But as you can see, yeah, man, this is how we trade. And obviously, I'm going to make more videos. I'm going to get better at explaining uh, analysis. I'm going to get better at all those things because I just recently started making videos and explaining how to actually attack the market. But as you can see, this is how I always draw up my charts. I only trade four things, which is GBP USD, Euro USD, US 30, and US 100. Those are the only things. Because one thing I can tell you is that the less things you trade, the better you become. The reason why I like GBP USD so much is because now I understand every pattern that it makes. I know what it's going to do before it probably does it. Sometimes I'm not always correct, so that means I'm not obviously going to be like winning every single trade on GPSD. Maybe I could win 3 out of 5 this week, or maybe like 4 out of 5, trades. You know, just understanding a few things that it always does. Sometimes I could be wrong because there's also fundamentals involved in this. I'll make a whole video explaining how to understand fundamentals and all of that. But yeah, for today, this is all I had. I don't want to say too much. Do you understand? I don't want to say too much, but I'll slowly make videos of everything in a broken down format, in the sense that I'll say, okay, today I'll just explain trend lines. The next time I'll explain the psychological levels, and the next time I'll explain supply and demand, and the next time I'll just explain Ichimoku cloud, and then the whole supply and demand system. But yeah, thank you for joining. I hope you got to understand a few things, and thank you for listening to this video. And I hope you like and subscribe. And if you want to, you could leave a comment. Thank you very much.